Hey there! Welcome to Whiteboard Invest, your #1 go-to source for clear and concise investing knowledge, explanation, and news updating daily.
Hey folks, another week has rolled around. How's everyone doing? We're hanging in there, and it seems like the start of this week won't bring too many surprises to the market. Bitcoin is still hovering around 63K, and Ethereum is holding steady as well. Not too shabby, right? Starting off a new week without too much bad news in the market is always a relief. So, let's dive into the latest market updates for the beginning of this week. So let's buckle up and navigate through this financial landscape together. Stay tuned for all the insights and updates coming your way. Hey there! So, the SEC's got its regulatory magnifying glass out, and Ethereum, ETH, is under the spotlight. The big wigs at the SEC, led by Gary Gensler, are hinting that ETH might just be an unregistered security, which is a bit of a throwback to the old-school Howey test. Crypto fans? They're not too pleased, calling the test a relic. Meanwhile, the SEC's been digging around for a year now with their Ethereum 2.0 investigation, making everyone in the ETH world a tad nervous. In a twist, this whole security label goes against what former SEC honcho Jay Clayton said before. Back then, ETH wasn't seen as a security, and that news actually gave its price a nice bump. But the CFTC's over there, casually sipping their morning joe, labeling ETH a commodity, which is a whole different ballgame. Then there's the drama with Ethereum's switch to proof of stake, which has some folks whispering that it's starting to look a lot like a security. And amidst all this, Consensus is stepping up to the plate, suing the SEC for trying to put ETH in the security box. They're not having any of it and are ready to fight back. The secrecy shrouding the SEC's moves is like something out of a spy novel, and it's got the crypto market on edge. If ETH is deemed a security, it could send shockwaves through the industry given its hefty $400 billion market cap. And with ETH's price wobbling after failing to cling to the $3,200 mark, the stakes are high. So grab your popcorn because this crypto regulatory drama is far from over. Tesla's stock took a joyride up 15% on Monday, hitting its best day since March 2021, all thanks to the electric carmaker crossing a major milestone with its full self-driving FSD tech in China. The surge came hot on the heels of Tesla satisfying China's data security standards, which had previously put a damper on its advanced driver assistance features. With the green light from Chinese authorities, expectations for FSD's full deployment in the world's largest EV market revved up, especially as Elon Musk made headlines with his visit to China. Despite Tesla's popularity in China, its cars had faced restrictions on government properties over data concerns, and the Biden administration's probe into imported cars' data collection added to the intrigue. FSD, an upgrade to Tesla's autopilot, has been available in China but with limited features like automated lane changing, far from the full autonomy Tesla's known for. Back in the U.S., Tesla's tussle with the California DMV over alleged false advertising of its driver assistance systems added to the drama, with Tesla defending its branding under the banner of free speech. Overcoming data security concerns in China was a significant hurdle, but a reported deal with Baidu for mapping and navigation tech could be the ace up Tesla's sleeve, allowing it to legally gather essential road data. This breakthrough comes just in time, as Tesla faces stiff competition from local EV champions like BYD, NIO, and Xpeng, who are all eager to take a slice of Tesla's market share. With Tesla's FSD now poised to navigate the complex Chinese market, the EV race is bound to get even more electrifying. Akita Inu, From Japan to Your Smartphone, a Blockchain Tale. Allow me to introduce the Akita Inu, a majestic breed hailing from Japan's northern Akita prefecture. These regal dogs have recently gained international acclaim, and it's not just because of their striking appearance. Picture this: their overseas membership surging from 300 to nearly 500 in just 1 year. The Akita Inu is spreading its paws across the globe. But here's the twist: How do you securely deliver those precious pedigree certificates to Akita enthusiasts scattered worldwide? Those paper documents had a habit of disappearing faster than treats at a dog park. Enter blockchain technology. Drumroll, please. The Akita Inu Preservation Society teams up with Meta, Akita Inc., local tech wizards, and Heirloom Inc., the cool U.S. company. What's the magic? A digital pedigree system powered by blockchain. Think of it as a super secure digital leash for Akita pedigrees. How does it work? Blockchain isn't just for crypto nerds. It's like a digital truth serum. It creates a transparent ledger that tracks every Akita's life story. No more shady business. Any attempt to tamper with the data raises red flags. And the cherry on top? Pedigree certificates now slide into your pocket via a smartphone app. No more waiting weeks for snail mail. Yuki Shoji, the society's board member, spills the kibble. Hey, Akita owners, your furball is legit purebred. Imagine the relief. No more wondering if your Akita's lineage is as authentic as a samurai's sword. But this isn't just about one breed. The Akita Inu Preservation Society just set a trend. Other dog breed clubs are taking notes. As dog lovers connect across borders, secure pedigree management becomes the new fetch game. So, next time you see an Akita Inu strutting down the street, know that their digital pedigree is as rock solid as Mount Fuji. And hey, maybe your pup's next certificate will be on the blockchain too. Feel free to scratch behind your Akita's ears while you ponder this digital doggy revolution. Another day dawns, and our beloved BTC seems reluctant to wake up. Currently hovering around 63K, it appears that we're in for a prolonged sideways movement. But as always, just like in our previous videos, that's Bitcoin for you, isn't it? Always ready to surprise us. So, let's stay prepared for the unexpected. Imagine the Australian Securities Exchange, ASX, as a bridge connecting traditional finance with the wild digital frontier of cryptocurrencies. Well, get ready for a groundbreaking moment. ASX plans to list Bitcoin exchange-traded funds, ETFs, by the end of 2024. But what's a Bitcoin ETF, you ask? Think of it as a magic basket. Instead of buying Bitcoin directly, you invest in an ETF that tracks Bitcoin's price. It's like saying, I want a piece of the Bitcoin action, but I'll let the experts handle the details. And here's the secret sauce. These ETFs are backed by actual Bitcoin, securely stored by Coinbase, the crypto custodian giant. No more worrying about private keys or wallets. It's all handled for you. Why should you care? Convenience for one. Buy Bitcoin with a few clicks, just like any other stock. Regulation? Check. Trade in a tightly regulated environment on stock exchanges. And speed? No more waiting weeks for paperwork. It's all digital and lightning fast. But this isn't just about crypto enthusiasts. It's about bringing Bitcoin to your everyday stock market. ASX's move sets a precedent. Other countries are watching. As global investors connect, secure crypto investment options become essential. So, whether you're a seasoned investor or just dipping your toes into the crypto pool, keep an eye out for those Bitcoin ETFs. They're bridging the gap between the old financial world and the new digital frontier. Feel free to explore this crypto rabbit hole. It's a wild ride. All right, let's unpack the latest on the U.S. economy. So the word on the street, or rather from the Q1 2024 reports, is that the U.S. might be tiptoeing into some economic quicksand. GDP growth has been more of a crawl at 1.6%, not even close to the 2.5% everyone was hoping for. It's like expecting a sprint and getting a leisurely stroll. Now, inflation's been sneaky too. The core PCE, which is like the economy's temperature gauge, hit 2.8%. That's a bit hotter than the forecasted 2.6%. And it's got the folks at the Fed furrowing their brows despite them trying to cool things down before. Market predictions are all over the place, but they're leaning towards just one interest rate cut this year. It's a big shift from the earlier, more optimistic forecasts. And with an election coming up, the Treasury's sitting on a treasure chest of nearly $1 trillion in the TGA, thanks to some savvy bond moves and tax revenues. They might just use that stash to give the financial system a bit of a boost. David Donabadian, the investment guru over at CIBC Private Wealth US, isn't mincing words. He's calling this report a double whammy of slower growth and higher inflation, the kind of news that gives investors the jitters. And with the Fed's big meeting around the corner, Chair Jerome Powell's probably prepping his game face. Keep an eye out for the QRA on May 1st. It's all about issuing more short-term U.S. bills to shake up the liquidity and calm down the RRP, which is sitting pretty at $400 billion. Remember last October when Treasury Secretary Yellen played her QRA card and nudged short-term rates? It gave the stock market a bit of a pick-me-up, and she might just go for a repeat performance. So, what's the takeaway for the money-savvy crowd? Hedge your bets on products that are priced right but have room to grow. It's all about staying nimble and ready to pivot with the market's mood swings. And just for context, the U.S. economy had already shown signs of slowing down from Q4 2023's growth of 3.4%, which was a step down from the 4.9% in Q3 2023. It's a bit like the economy's running out of steam after a sprint. There you have it, a snapshot of the U.S. economy's current rollercoaster ride. It's a mix of caution strategy and a little bit of economic wizardry. Let's chat about Kiana Rodriguez and the whole Samurai Wallet saga. So Kian, one of the brains behind Samurai Wallet, is in a bit of a pickle with the law. He's staring down the barrel of some pretty hefty accusations, none of which he's admitting to, by the way. They say he's been mixing up money, making crypto transactions hard to track, and that's a big no-no in Uncle Sam's eyes. Now, Keone's not behind bars. He's out on bail, but it cost a cool $1 million, and he's got to stick around his pad with the feds keeping tabs on him electronically. Plus, he's got to keep his hands off Samurai Wallet and any crypto dealings unless he gets a thumbs up beforehand. The drama's set to continue with a court date in Manhattan on May 14th. And get this, the U.S. government had already put the brakes on Samurai Wallet's operations and nabbed both Kian and his buddy William Lonergan Hill. The prosecutors are throwing around some big numbers, claiming Samurai Wallet's been a hub for over $2 billion of illegal transactions and helped launder more than $100 million since 2015. They're even suggesting Kian was ready to roll out the red carpet for some Russian big shots, despite Europol's side-eye. This whole thing's got the crypto community up in arms. They're shouting from the rooftops that the government's trying to make financial privacy a crime. And Kiani? He's not alone. Roman Storm, the guy behind Tornado Cash, got snagged last August, and he's singing the same tune. No guilt, ready to fight. So, there you have it. The lowdown on the Samurai Wallet drama. It's a tale of tech, privacy, and a whole lot of legal wrangling. Now let's talk about the ETF scene. In the US, it's like a sad trombone. BlackRock's IBIT has been doing the money tango for 4 days straight. No inflow, nada. And remember Grayscale's GBTC? It's leaking cash like a sieve. $24.7 million. Ouch. But wait, there's more. Hong Kong just rolled out the red carpet for Bitcoin and Ethereum spot ETFs. It's like they're saying, hey, come on in, crypto investors. Now, these ETFs aren't just playing hide-and-seek. Their performance is doing the cha-cha with Bitcoin's price. BTC's chilling around $63,500, and ETH's not doing any victory laps either. It's stuck around $3,180. And rumor has it, the SEC might not give a thumbs up to a spot Ethereum ETF this May. Analysts are all nodding in agreement on that one. So, while the US ETFs are having a snooze, Hong Kong's opening a new playground. It's like adding another slide to the crypto jungle gym. And hey, it's a sign that the whole crypto crew's got potential. So, MicroStrategy has been at it again, scooping up more Bitcoin in April 2024, and their stash is seriously impressive. 214,400 BTC to be exact. That's like having a golden ticket to Willy Wonka's chocolate factory, but for the crypto world. The company, which is kind of like the Warren Buffett of Bitcoin, has been buying up the digital gold at an average price that most of us would bargain hunt for a used car, $35,370 per Bitcoin. And they're not new to this game. Since the end of 2023, they've added 25,250 Bitcoins to their treasure trove, spending a cool $1.65 billion. Even their latest buy, a modest 122 BTC for $7.8 million, is like adding a cherry on top of an already decadent sundae. Now, their CFO, Andrew Kang, is like the prude parent at a graduation, confirming they've raised over $1.5 billion through bond offerings. It's their 14th time in a row beefing up their Bitcoin balance sheet, which is pretty much their way of saying, "We believe in Bitcoin, no matter the weather." They started this journey back in August 2020 with a hefty $250 million investment. And even though they've seen some rainy days with the market's ups and downs, they're still building their Bitcoin empire. Sure, Bitcoin's price has taken a dip from its all-time high, but MicroStrategy's sitting on a potential profit of $6.3 billion, which is nothing to sneeze at. However, it's not all sunshine and rainbows. Their revenue has slipped by 5% compared to last year, and as for their stock price, it closed at $1,192.97, with a market cap that's a head-spinning $22.8 billion, though it did take a little tumble after hours. But hey, that's the roller coaster ride of the crypto market for you. In the ever-surprising world of cryptocurrency, a new meme coin named Dogwifhat, WF, has been making waves, especially on the Bybit exchange. It all started at 5 p.m. on April 29, 2024, when WIF was listed and began trading. Like a rocket, its price blasted off from $2.70 to an astonishing all-time high of $41.85 in just over 10 minutes. This meteoric rise was a sight to behold, but it was a fleeting moment before the price settled back down to the common market level, a phenomenon that seemed to occur only on Bybit. As of the latest, WIF has been trading at $2.79, marking a modest 24-hour increase of 4.51%, according to Bybit. This meme coin, inspired by the image of a dog donning a hat, arrived right on cue with the resurgence of meme coin popularity within the Solana ecosystem. It joined the ranks of other rapidly growing meme coins like Pipi, Bonk, and Book of Meme. The buzz around Dogwifhat was amplified by endorsements from prominent traders such as Saga and Ansem, which helped propel WIF to new heights, overtaking Pepe in market capitalization by the end of March 2024. The community's enthusiasm didn't stop there. Supporters raised a whopping $650,000 to showcase the token's logo on the Las Vegas sphere for an entire week, lighting up the night sky with their meme coin pride. This narrative of Dogwifhat is a testament to the dynamic and community-driven nature of the crypto market, where trends can skyrocket and community support can turn a simple meme into a market sensation. In the bustling financial markets this morning, the US dollar emerged as the front-runner, flexing its dominance while core bond yields experienced a price hike ahead of a hectic week. The yields on U.S. bonds gracefully dipped from 1.9 to 5.3 basis points, with the longer-term outcomes shining brighter than the rest. In an unexpected twist, the U.S. Treasury revised its quarterly borrowing estimate upwards by $41 billion from the January projection. This slight uptick in yields at the tail end of the curve hinted at the market's sensitivity to such fiscal adjustments. Over in Europe, German bond yields mirrored this trend, with a modest decrease ranging from 2.6 to 4.5 basis points across different maturities. Inflation indicators from Spain, Belgium, and Germany didn't stir up any doubts about the European Central Bank's ECB intent to slash interest rates come June. However, the re-acceleration of inflation painted a picture of the bumpy road ahead, potentially constraining the ECB's operational leeway in the following months. ECB's Wunsch, the latest to voice caution, echoed the sentiments of his Dutch counterpart, drawing parallels with the U.S. inflation experience to underscore. the need for vigilance. Currency investors, meanwhile, kept a watchful eye on the Japanese yen, which soared over 1% against the euro and the dollar, possibly due to intervention, before settling down significantly from its daily peak. The USD-JPY pair wrapped up at 156.35, contrasting with the day's low of 154.54, while the EUR-USD pair appreciated from 1.0693 to 1.0721. The British pound fared quite well, though its strength was likely more attributable to the ripple effects of USD and EUR movements against the JPY rather than any inherent robustness of the GBP itself. Nonetheless, the EUR-GBP slipped to 0.853. Yesterday's national inflation indices reached their zenith with today's European figures. The risk leans slightly towards an uptick, but any deviation from consensus, if at all, would be minimal. The first quarter GDP growth of the EMU is also on the cusp of being unveiled. France just printed a larger-than-expected quarter-over-quarter figure of 0.2%, bolstering the belief that the broader European economy is rebounding from the winter recession, with the Q4 number adjusted down to 0.1% QQ. Yet, both CPI and GDP might leave a minimal imprint on the European market ahead of tomorrow's holiday and the FOMC meeting. The policy statement and Chair Powell are anticipated to exude far less confidence about inflation returning to the 2% mark following a series of recent data. This shift in stance, though contrary to earlier times, is somewhat priced into the U.S. currency market. The latter assumes a rate hike this year, with divided opinions on a second increase. This means the threshold for further yield increases in the early stages, e.g., 2 years above 5%, is high and might require Powell to reconsider rate hikes. That's not our base scenario at the moment. The tail end continues to be the most vulnerable segment. The U.S. dollar claimed the upper hand this morning, but traded with negligible technical gains. This smooth paragraph encapsulates the intricate dance of financial indicators and central bank policies that shape the economic landscape, highlighting the delicate balance between market expectations and the realities of fiscal and monetary strategies.
Alright, that's hottest news today. If you guys did find this video helpful, leave a like and subscribe our channel for more free content. Thanks for watching. Peace out.